Mayuresh Joshi, the head of equity research at William O'Neill, is with us on the show. Mayuresh, we were just chatting with Rupal of Ariel Investments, and she was saying when the going gets tough, it's perhaps time for your portfolio to hold a lot of dividend-yielding stocks. Is that and it's worked for global equities, whether history tells them that if you invest in dividend-yielding stocks in the U.S. markets in the past recessions, etc., or even in the other equity markets, it's worked. Does that work in India as well in 2023? Should one be looking at dividend-yielding stocks, and if yes, which ones?
Afternoon, Rima. So I think the arguments go both ways, right? Dividend yield stocks probably give you the comfort in terms of more payouts coming your way in case the markets go sideways. But is there capital appreciation in the underlying stock itself for the next 12 months or 18 months? Probably not, when the market probably gets very, very volatile. So yeah, I think the argument probably then goes in favor of a lot of these high yield, dividend yield stocks, that they might continue their payouts in a period of uncertainty. And a lot of these dividend yield stocks actually belong, the high yielding ones belong to the government sector as well. A lot of the PSU, oil and gas space, you've probably got very rich entrants even within the private space, or very few within them itself. So I think is the underlying strong enough to probably have business momentum and therefore even appreciation happening, or stability in terms of stock prices is something that needs to be addressed. But yes, I think energy as a space generally I think is popping up onto our O'Neill sector rotation. I just tweeted about that yesterday as well. And our own belief is that that should very well continue, with a lot of government initiatives expected to come through, specifically in terms of renewables with more capital outlay. The entire perspective in terms of strong volumes growth with a lot of capacities being built over the next few quarters, translating into superior earnings growth, might very well continue with a strong underlying dividend yield as well. So I think energy as a space, within those, I think a couple of these decent dividend yield stocks, NTPC, Power Grid, might be something that long-term investors.
All right, Mayuresh, I want to speak about some companies, that's the metal stocks. If there's a dovish note that's going to be coming in from the Fed, that'll be pretty good news. And that's the hope out there. For the time being, the stock is up close to around 1.5% to around 2%. What's your view in it from here on?
So some price strength still on the O'Neill lens, Nigel, around 2% odd when it comes to the RS strength on the O'Neill methodology. But two things are happening here. I think on the gross debt that they're carrying on their books itself, the additional outlay that might happen with the Monet buyout, though it's coming in from internal accruals, I think that will take some element of stress on the cash flows itself. They have deleveraged their debt to a large extent. So to that extent, the impact in terms of this buyout should not be that significant in terms of more leverage occurring on the balance sheet. But I think what happens in terms of the end product prices, I think that's equally important. When you go through a lot of transcripts, you're probably getting the feeling that prices at a global level, both HRC, CRC prices, have come up quite significantly in lieu of the recessionary fears. What happens with the China unlock will be a huge trigger for these stocks going ahead as well. And input costs have definitely started going lower, whether it's coking coal, and with crude going down, I think even the logistic costs have gone down. A lot of these companies, including JSPL, has also started using a lot of captive power. And Angul's captive power is there to definitely help them going forward as that gets commissioned over the next few quarters. So yeah, I think a lot of these metal companies, steel or non-ferrous, including the likes of Hindalco, are having a very poor EPS rating at this point of time. Maybe a couple of tough quarters to probably bail them out as LME prices start moving higher. But yes, I think a couple of percentage points for JSPL to have that RS rating go up, come to the pivot. Maybe some momentum onto that stock now.
Mayuresh, publisher of banks, time to take some profits if you are sitting on profits?
Afternoon, Prashant. I believe so. I think a couple of reasons why. One, I think the kind of run that has happened in the PSU space, specifically in the mid-cap PSU space, has been humongous over the last few weeks. I think there's a lot of missed out feeling in terms of not getting in at the right time, and therefore I think the kind of euphoria that you're seeing for these stocks is sky high at this point of time. But elementarily, I think two things are expected to happen. One, I think the NIMs might actually peak off because what you're expected to see in terms of the transmissions they have done on the advances side, as the deposit rates start working higher, you're probably expected to see NIMs consolidate in a very tight zone going forward. The second element itself is the kind of capital adequacy that a lot of these mid-cap PSU banks are carrying onto their balance sheet at this point of time. So if one intends to replicate the growth that they probably did on a low base, I think it's going to be very, very tough with lower capital adequacy, specifically Tier 1 ratios, onto their balance sheets. So NI growth will be reasonable. NIMs might be staying put in a range for some element of time. With the run-up, I think it's come close to adjusted book values for a lot of these mid-cap PSU stocks as well. And therefore, I think the entire perspective in terms of a significant run-up that has happened, I think it's away from our key pivot levels of the O'Neill lens. Our own take is that a little bit of profit being taken off the table will do no harm. So if somebody is sitting on good profits, I think some element of profit booking is mandated, at least for these mid-cap PSU stocks.
Mayuresh, did you have a look at the Sula Vineyards IPO? Is this something someone should invest in? It's the last day to invest or subscribe to.
So, Reema, normally I think we don't comment on IPOs, but when I was going through the numbers for Sula in particular, the top line has been stagnating for the last few years. If you probably look at the margin bump up that the stock has seen, specifically in the last financial year, it's a significant bump up from the normalized margins they were posting over the last few fiscals. This is something that probably needs to be taken into account as well. Yes, I think the entire culture in terms of wines, the kind of duty structure specifically on imported wines as well, that does prove to be an advantage to Sula at this point of time. But we've hardly seen any kind of growth that probably translates into the bottom line as well. And therefore, our own sense is that with the kind of valuations that the pre-IPO price is probably asking for, there is little to be left on the table for investors who probably get into this IPO. So I think we'll wait and watch on how it opens out and wait for an IPO base as per our studies.
Mayuresh, any thoughts on these insurance type companies, GIC, New India Assurance? They've rallied about 8% Any news that we're missing?
I'm not sure even what I have heard on that. But generally, I think the kind of premium growth that they've probably witnessed has been pretty stable so far. Whether any announcements are expected to come through for a few of them, not really sure. But not really sure behind any news behind these moves.
Okay, all right. Mayuresh, earlier this week we spoke, or just a few days ago, we spoke to Ramkrishna Forg. And the management, they sounded very, very confident. They were talking about revenues going to around 5,000 crores, with the current capex itself. The market seems to be liking that. There's big scope for improvement, it appears so. What's your view on the stock? It's currently up close to around 5.5%.
The momentum can very well continue, Nigel, because I think the commentary itself was very, very strong. And on the other hand, I think the non-forging business or non-classic drugs business as well, I think they're diversifying into it pretty well. So is its bigger counterpart, Bharat Forge. So I think it's going to be very, very interesting. I think the kind of numbers that get posted from the next quarter's perspective, if they do walk the talk, I think the momentum in these stocks can very well continue. But auto banks selectively are in a very, very sweet spot, Nigel, at this point of time. At MarketSmith India, obviously, we like a company called Gabriel, very strong show in the quarter gone by. They're also getting into railways, the conversation that you were just having with Prashant. And also, I think the kind of margin profile that they've got, an expanding margin profile and an inflated input cost scenario, along with a very clean balance sheet, probably augurs well for return ratios as well. So yes, I think the momentum can continue for RQ Forging and a few auto ancillary stocks like Gabriel.
Okay, Mayuresh, thank you very much for your time. Great speaking with you. Appreciate you joining in.